Okay, I think we're up. Hi everybody, Merry Christmas, Happy Holidays, Happy upcoming New Year. Whatever part of the world you're from, I think there's something festive at this point in the year. So even if it's just time off work, hope it's going well and that everyone is happy and healthy. Okay, housekeeping first. First things first, go get the FTX app from the App Store. If you're still thinking of Christmas and New Year's presents, you can buy some shitcoins and even some NFTs for your family members and then look like a genius or a complete moron later in 2022. And the good thing is, because it's a gift, they can't really complain about its financial performance because it's the thought that counts, right? So it's the perfect opportunity to take this asymmetric punt at giving crypto or crypto type of things like NFTs to your family and friends. So go check them out. They've been really good partners to us. Fun stuff and further developments coming next year, but it's the best crypto app on the market. No crazy derivatives, leverage, futures stuff for them to lose all of their deposits. So go, it's pretty innocent, and buy some JPEGs for your family members. Second thing, apologies from myself and the Duck for the less than consistent upload schedule. It's not just holiday things, but the Duck has been on a wonderful safari in Africa with intermittent internet access, as you can imagine, so it's been slightly harder than foreseen. I told him to really take the whole time off because he'd be an idiot trying to like live stream drawing boxes on candlestick charts while, you know, hanging out in one of the most beautiful corners of the world. But he somewhat insisted, but anyways, his internet's been non-existent and he's coming back tomorrow, so that should be good. I, on the other hand, have had the virus thing for like a week. I got wrecked on Monday, had a rough couple days and just been getting better. I'm probably at like 70-80% now, but it just really wasn't fun, and so I wasn't in the right physical and mental condition to be, you know, writing newsletters and doing live streams and stuff. I was just annoyed and wanted to get better, and I'm most of the way there now, so just one of those things, right? I saw an ONS, kind of our Office for National Statistics estimate, that 1 in 10 people in London had this new variant, which is entirely believable. So whatever, these things happen. And it happened to me, and it wasn't fun, hence why no content. So apologies on our behalf, you know, just one of those crazy end-of-year things. Duck on a safari, I'm in bed. Classic divergence there, if you will. Davis says, how many videos are you planning on updating? A fair few of them, and I'm probably not going to delete the old ones. I haven't really made a decision. It might be fun to keep them up there, as far as you get to see the old one and the new one. But if I think the information is like actively bad, I might unlist it or do something like that. But for the time being, it's just an update type of thing, more so than anything else. You can leave Australia now, question mark? I don't know, I'm not Australian. Okay, cool. Let's talk about markets, because things have moved, which is nice. And we'll talk about Bitcoin, ETH, ETH BTC, some altcoins, and then DeFi as well. It's always scary when I have to talk about DeFi, because recently, you know the whole adage of when dog shit pumps, it's like the market has reached some sort of inflection point in the last like few months, because DeFi has been such an underperformer relative to just the market and ETH especially. DeFi pumping has been like a not great signal, but there have definitely been some good trades there, so we'll take a look. As for me, just a straight upfront disclosure type of thing, I've closed up shop for the year, and I'm going to be away for a couple days with family towards New Year, etc. I have no intention of running any like short-term, mid-term trading positions into the end of this year. I'm done. Business is over. Sent all the stuff to my accountants last week. Paid the taxes. You know, the dreaded T word. I've done all of that. So my personal shop is closed. So this will be just more of a kind of analytical type of stuff and potential trade ideas. But for me personally, business resumes on the trading side on January 1st, and I'm not planning on taking anything, at least for clean bookkeeping purposes, towards the end of this year. Also, that I grew up in Moscow. For us, Christmas isn't really a thing. The whole celebration takes place on New Year, and because it's an Orthodox Christian country, Christmas is a slightly more kind of traditional religious festival in January, more so than this whole Santa Claus whatever type of thing. So for us, that's New Year. So that's really when the celebration is in full flow. So okay, let's take a look at BTC. Nothing much from the quarterly. Just gonna put that out there. The monthly range has proved to be helpful. Just as a reminder, this is what we did with it. So we had the highest close as our range high anchor, lowest close as our range low anchor, and then the market was at a midpoint. And in a not so shocking chain of events, the market has bounced from the range midpoint after moving down 40% into it. That shouldn't be like a terribly surprising move. Hopefully it wasn't. We discussed it at some length in the previous live stream. I think the specific substructure that we had was this pre-breakdown consolidation here, which did its job very nicely. No closes, acting as support like right at the bottom, and no closes below it either, which are all very positive signals. As you know, I still had some reservations given the unfilled wick, but at the very least, we were quite adamant that this is the type of area where it makes sense to manage/close shorts, because if you're going to get any sort of bounce, even if it's a counter trend bounce, this is kind of the area where it would most likely originate from. So even just from a trade management or a rebalancing perspective, it just made sense to shift gears a little bit in this area, and that's what happened, which is really cool. And it's that diagram we talked about, remember, where you had high time frame level number 1 and high time frame level number 2. You might have easy trend following from A towards B, right? Especially this middle bit. But once it actually gets to support, the probability of a move like this continuing becomes significantly lower. And that's what happened, right? Even if you have a bearish trend, late bears will still find a way to lose money to the counter trend bounces. And it's the same in a bullish trend. Very late bulls will still will find a way to lose money on the slight pullbacks, or those lower highs, whatever they may be. So where does this leave our kind of weekly chart? I think one thing we can do is break it down a bit further. Just very quickly in terms of my eye test. The market's like now approaching an area where if there's going to be any type of profit taking or slowdown or further chop, etc., I expect it to be reached this week, because it's reaching this former weekly range high at 52k or thereabouts. And if we look on the daily time frame, if we just quickly sketch that level, if we will, and actually delete this for the time being. So the market's trading into this prior weekly highest close. And again, with weekly levels, it's fine to give them a bit of space. They don't need to work perfectly. So if we take some sort of area, like what is there in the mid to low 50s, there's also confluence in the form of the former range low at 53k or thereabouts. So purely contextually, if we put those two things together, which is this is a weekly level and this is daily structure, if we just delineate it very roughly as like a zone, giving us 52 to 54-ish, it's a bit liberal, 52, 53.5, whatever, low to mid 50s, I think is enough for like a weekly type of live stream. You can see that contextually, the market's now much closer to resistance than it is or was to this weekly support, which we outlined at length. So structurally, the kind of probability of the long trade becomes obviously like the risk reward of the long trade is very favorable down here and gradually becomes less favorable as it reaches resistance, right? And so now that it's approaching this type of area, it's probably the first point where if the market's going to slow down at all, or kind of on a relative basis, the less attractive areas to open fresh longs, I think we're starting to get there in the form of this weekly structure, and for a wick type of candidate, this daily type of level as well. So essentially, bounce from weekly support, good, but the relative risk to reward of taking that trade now is significantly different given it's starting to reach some key contextual areas. Does that make any sense so far? Also, like the video if you like the video, and it's free. Just click it while you wait for me to read the chat, I guess. Why not? Icy Wrecked People says it does. Okay, presumably it makes sense to more than... Hi, Cred. Hi, Tim. All good? Yes, sir. Okay, cool. So that's sort of the short of it, if you will. That's not a position. I just mean the summary version, of course. And I guess I should also mention to some extent that you do have this like double top type of setup, or equal highs here from the last couple of weeks of trading. So if there's ever going to be any type of, you know, attempted breakout through these highs, which then fails to get acceptance, that would look like a pretty ugly chart. So I guess what I'm saying is, contextually, market structure is bullish and the market's bouncing from support, but that trade is becoming less and less attractive with every uptick into the low to mid 50s. That's all that means. I do want to make a comment on weekly market structure, and it's technically bullish, right? Especially if we look at recent price action, it should be fairly unambiguous in that regard, whereby you've got a low, you've got a high, you've got a higher low, you've got a higher high. Now, yes, by definition, you had some sort of lower low in order to give the market, or, you know, present a deeper dip. And this market structure break was certainly evident on the daily time frame. But in terms of big weekly structure, you know, low, high, higher low, higher high. If we look at this low relative to the one before it, if we're taking big swings, this is still, until proven otherwise, a higher low. So weekly market structure, right, is technically still bullish. That doesn't, however, mean you can just start ignoring levels of, like, key contextual levels of resistance and ignoring risk to reward, etc., etc. That's why it made sense to, as we talked about, reconsider at the low to mid 40s. When the market reached that, I think the title of that video was A Downtrend into Weekly Support, and we talked about that scenario at length. That was our kind of base case. And now the same is applicable here, right? Even if market structure is on your side, like it was there, you still need to consider what is that market structure trading into. And it's sort of a similar scenario now. Even if market structure is on your side, what is it trading into? And so as it starts to push into the 50s, what it's trading into becomes far less attractive for fresh, long positioning, and generally makes sense for at least short-term profit taking, right? Okay. So what does that mean trading-wise? So if we re-add those... Well, first of all, let's go back to the monthly very quickly to get our real big picture view, and then we'll do some daily, weekly stuff, right? We will certainly look at ETH BTC. Now, if we want to get really spicy with it, right, the base case for this weekly, monthly range, weekly range, it's visible on all time frames, really, high time frame range, as we discussed, you had a breakout attempt at the range high, which failed. Generally, if you have a move through one side that isn't accepted, that suggests a move to the other side. But at the moment, we're getting quite a reasonable bounce from the range midpoint. So if we just take these three boundaries, what trades make sense in terms of not diddling in the middle and doing business at the extremes, which is generally what our goal should be for ranges? Well, for the bullish continuation case, a range high reclaim would be really sick. It's very unlikely that it looks this clean or this easy or this straightforward. It would either be some low time frame, really fast move through it, and you might get like a tiny retest on the 5 minute to catch on, or it'll be some sort of agonizing, you know, break and then a chop and then eventual retest before moving higher. But in any case, if we're just looking at structure more so than execution, once you've had a fake out at a range boundary rather, the chances that you get a second fake out are pretty low. So if the market gets re-accepted back above 59k, or, you know, it just fails to act as resistance, right? If it trades through it or is accepted above it, unlike what happened here, that's probably a good trend continuation signal towards much higher prices. Because again, contextually, this chart would look mental, right? Because you had a huge impulse, this would be chop, and then you get another trending move after however long this period is, right? That's pretty mad, and your targets would have to reflect that as well. But the upside continuation trigger would be acceptance above where the market previously faked out, which is 59k plus. Okay. At the same time, if we're doing business at the range low, but on the same side of the market, that is the bullish case, well, we know that we've had a failed breakout attempt at the range high, which then acted as resistance and pushed the market down. It wouldn't be unreasonable from a purely kind of technical symmetry point of view to either just hit the range low and bounce from there, or mirror what happened at the range high and simply do that at the range low as well. That is to say, make an effort to break below the range low, an effort just like this one, which isn't accepted, trades back above, you have your invalidation and then targets in the form of the range midpoint and the range high. I mean, naturally, my eyes are drawn towards this juicy triple bottom if that scenario becomes tangible. But in any case, it would need to reestablish above 35k to give a similar signal to this one. So in terms of what's happening right now, as we discussed at length, this is monthly support. All the moving average stuff is here, mid-range of whatever. There's a bunch of structure here, so a bounce makes sense. But what other trades not at the midpoint would also make sense? If it's bullish, it would either be a reclaim where you had a fake out, that's usually a good setup, or a bounce from support, be it outrightly or on a failed breakdown type of attempt, which is the mirror opposite of what happened up here, just taking place here before, extending this consolidation. Does that make sense so far from like big picture, monthly, weekly? Okay, one thing we can do, given this range is quite big, we can spice it up and break it down into quarters as well, right? I think I saw Trader SZ do this in like must have been early 2019 or something. We had like a big high time frame range. You can just break it down a bit further. I don't use this a lot, but like sometimes for higher time frame stuff, it just makes sense. Here we go. So all we've done is the same monthly range, highest close, lowest close with the midpoint, and then we've just added kind of the midpoint between mid and range high and mid to range low. Now look, I realize how fucking stupid and redundant this seems. Like, it's a monthly chart. I'm here drawing like candle, line, body, wick, random line, calling it a mid, quarter. Like, it's TA bullshit, right? But it's still helpful contextually, in my opinion, and gives you some kind of context or sense of risk to reward. And it served us pretty well so far anyway, right? So, especially when you have confluence. Now, if we look at where this quarter between the range midpoint and the range high falls, it's at this 53k handle. Now, what falls at this 53k handle? Is it technically significant, like, on its own? Well, we know that our weekly level comes pretty close, right? We can just extend that here. This is going to be our weekly level, which is already being tested. But then, lo and behold, if we go to the daily time frame, you also have confluence in the form of this aforementioned block or previous floor. So if we kind of, you can even get rid of this weekly level and, be a bit greedier with where resistance is. You can just see the same case made with a slightly different technique. That essentially, you have mid-40s support and mid-50s resistance. And that's sort of where the market is right now, between those boundaries. This is it. Okay? So contextually, as it continues to push up into this structure that we've outlined, and again, we know there's a ton of high time frame basis for it here, right? We've got our weekly structure, we have got our daily structure, and we've got the range kind of quarter midpoint between the midpoint and the range high, right? There's like a lot of technical bullshitty stuff going on at the low to mid 50 handle. So contextually, from a risk reward point of view, as the market continues to push into it, fresh longs become less attractive. Specifically, the kind of scenario that I would be cognizant of would be some sort of failed reclaim. Because we know from just observing straightforward technicals, crypto Twitter, etc., there's a lot of sidelined capital, which is looking for some sort of reclaim event to get long. Now, we discussed somewhat preemptively that this daily market structure was pretty bearish, right? And if that were to shift, you would have a daily market structure shift coming off of weekly structure. And the market gave that to us in pretty, unambiguous terms, whether you want to use straightforward market structure levels or some sort of diagonal break, right? As we discussed, it was pretty clear that, some sort of shift in behavior had taken place with this higher high. Now, with the mid 50s level, this is kind of not an unreasonable bull-bear line for a lot of market participants, where essentially their argument is, quite reasonably, this low to mid 50k area is high time frame level, yada yada. If we reclaim it, then I'm bullish. Now, as I've tweeted before, reclaim setups aren't just technical setups, right? They're also time-based. If you're trading a good reclaim, generally speaking, the market should move quickly, because the logic of the setup, like if the market does this, is that everyone who sold here is offside and is being pressured by the market to either buy back or close their short position or do whatever it may. And the best kind of reclaim setups are the ones which exert the most pressure on offside participants. So then the question becomes, okay, if the market just kind of floats up into this area and then kind of starts to stagger, etc., like how much pressure is that really exerting on the alleged bottom sellers? The answer is not really all that much, right? And so the probability of the setup playing out successfully also is reduced, because the TLDR version, if you're tired of my rambling, is that slow moving reclaim setups probably aren't reclaim setups, right? Of course, the opposite is if the market just completely chads through this, these guys think, oh, fucking hell, I've sold the deviation, and then usually get a squeeze much higher, right? Or some sort of consolidation, they buy back within that consolidation, and the squeeze takes place as well. So if this is going to be an area of resistance, because we mentioned all the weekly and monthly factors, one setup I would keep an eye out for would be a fast move into it with a lot of forced buying, liquidations, whatever as a result, but then a kind of failed reclaim or a failed breakout pattern which takes it back below the level. And at that point, this was just probably the top or the excess or the failed acceptance back above this range of some sort. That sets your risk up nicely as in validation, and then a move back into the range where it came from becomes a lot more likely. In any case, no matter how it looks, right, the low to mid 50s remains contextually, or at least on the first test, far less attractive than low to mid 40s. Just like if you bet on support breaking here, you're not having such a great time. I think in a similar vein, until proven otherwise, if you immediately bet on resistance breaking here, that's not a trade that wins, more than 50 times out of 100, or I don't think it's generally plus EV. I still think there needs to be evidence of trending conditions until proven otherwise. I still think we're generally range bound until proven otherwise. Support held in this range, so I'm going to somewhat assume resistance is going to hold in this range as well. Now again, for me it's easier to say because I'm flat. I don't have a position to manage. I'm not going to short this level. Obviously it depends when it sets up. Maybe if it's early January, there'll be a nice trade to be taken here. But in any case, I think if you have reasonably established positions from the range low, it's not a bad play to assume that perhaps this doesn't disappear on the first test, and that we might range for slightly longer than we'd like. It's just one of those things, guys. You had like confluence of support here at the lows and it held. You've got confluence of resistance here at the highs. Maybe it rolls over, but you don't fucking know that. So as long as you don't round trip your bottom buys back to break even because you just assumed it would go back to 100k, 60k, whatever, I think you're in a pretty reasonable spot. I can't wrap my mind around the fact that a pro trader would only use support resistance lines plus trend lines. I mean, that's not the only thing I use. And also, the tools themselves might be simple, but turning those into a trading system is completely different. Identifying a trade management, risk management, execution, the actual drawings on the chart don't give you any of that. That's where the real edge is. There's very tiny edge in trade identification, right? Like if you're a losing trader and then I come to your house and say, no, this is how you draw the box, it's very unlikely that that information alone is going to, you know, completely transform you. So that's not really where the source of the edge is. It just provides context and potential areas to do business, and that's it. It's not the actual business of trading that you derive from whatever trade identification tools you use. Okay. What else have I missed? Let's do a TLDR for BTC, right? Okay. TLDR BTC. Mid 40s support make Boeing. Now low to mid 50s res. Confluence. Still kinda range bound until strong evidence suggesting otherwise. Argument for strong uptrend cont becomes viable. Weekly close above, what the fuck is this level? 52k. 52k. Strong. And or 53k daily reclaim, which doesn't shit itself. What else have I got? Support, supported, maybe, resistance, resists. If teleport giga bull strength through mid 50s, range high 59k, still res, prob a trade there from 53 to 59. Okay. Right. So here's the TLDR. As we discussed, mid 40s support make Boeing. That's the monthly mid range. It's weekly support. It's the 21 weekly moving average. Just like a ton of shit going on there, so that makes sense. In a similar vein, we have resistance in the low to mid 50 handle. Again, that's the weekly level. That's the monthly range quarter thing. That's daily resistance. There's just like above the, it's the level above this double top. There's like a ton of shit there going on as well. Mid 40s was stacked in a similar vein. Mid 50s is stacked as well. And it's still kind of range bound as a result, right? You basically had a really good support. The market bounced. Now it's approaching a similarly good resistance. I would say I think the support is slightly quote unquote stronger than resistance, but that's a completely pulled out of my ass bit of a comment that probably isn't even worth quantifying. So it's still kind of range bound until strong evidence suggesting otherwise. So what would that evidence look like? It would either be a significant weekly close through 52k. So this high just gets completely like dildo candled and there's no hesitation or top buying type of activity going on there, and I say that because the levels are pretty confluent, 53k reclaim, which is that daily box we talked about, takes place and doesn't turn into one of those failed breakouts that we talked about. So even just like eyeballing this information, right, if you get a weekly close that looks strong above 52k and the market moves through the daily level, that could potentially be a buy, and then you have a tight invalidation where if the daily level fails, then maybe the weekly idea is shit or the chart is just far less clear. Like you can kind of use this information to maybe generate ideas on your own, but don't, because I'm an idiot drawing lines on charts, right? So we're all here for entertainment anyway, aren't we? And the basic premise is we kind of implied supported, there's a lot here, it did its job. In a similar vein, there's like a lot here and it might do its job, right? Until proven otherwise. If we get like a turbo giga bull teleport, I don't know. I'd say my gut feeling for that is, I don't know, 20%, 25%. I'm not betting on it still, unless it happens like early next month. So maybe just take my comments slightly, with a bag of salt, even more so than usual, because I'm not positioned into this or for this. But if this teleport gigaball strength thing happens, it would need to just, the candle would have to look something like this, right? Like pretty significantly and unambiguously through this high, right? That's actually not a bad illustration of what that candle would have to look like. And then there's probably a continuation trade from the low 50s, which is this weekly level and the daily level as well, into the actual range high at 59k, which is whatever here. That might be a short-term trade that's available pending the weekly close. But just be aware that as the market ticks up, fresh positioning, just to me at least, on a relative risk-to-reward basis, becomes less attractive. Just like shorting into mid-40s became less attractive as the market trended into a key level. You can make a similar, slightly less compelling, but similar argument for this. Fresh long becomes less attractive as the market trends into a similarly important contextual level. So here we've got it, the range, what a strong trend would look like, some expectations given what happened at the lows, and what the Giga bull case looks like as well. Leave a like on the video if you enjoy these short summaries. Just going to delete it in like 3 seconds. Okay. ETH. I still think this is unless you've got like a weekly time frame position. I think on lower time frames this is rather untradeable. At least for me, it's not something that I want to trade. You had a weekly close at 4K and then a bounce. That's pretty good. I think if it goes back below, and I've said this like a million times, but certainly on the weekly time frame at this point, there still hasn't been a meaningful close below 4K. I count this red candle as a close at the level, right? For me, this is at the level. It's not compelling enough to suggest a breakdown. Generally speaking, and I've discussed this on the stream before, if I get a candle close, which is kind of marginal, I'll, on average, give it the benefit of the doubt. Unless it looks like a clear breakdown or a clear breakout, I'm going to assume the level's doing its job, right? So this support held. My eye test tells me that if the market's bullish, I mean, potentially all-time high, who knows? But first trouble area would be this weekly pre-breakdown structure at 43, 4400-ish. That's just kind of what my eye test says. Because if you look on the daily time frame, I'm not even going to try to insult your intelligence by drawing levels on this thing. It's frankly insulting. Even the 4K price action, or the price action at 4K, which is one of the clearest and most unambiguous levels on the chart, has been dog shit, right? So I think if you're trading it on the weekly, that's got to be your idea, that 4K holding, and otherwise it's cooked. And on lower time frames, you know... I'm not going to insult your intelligence by trying to draw on this or give you my take, etc. I think the minimum viable time frame is the weekly, and anything else is just kind of cock and bull torture. If for any reason 4K were to fail or the market takes a shit, I think the first trouble area for it is more or less 3K or mid, like 32, 3300, which would be a cool, what is that, 20%? Yeah, 20%-ish type of move. But yeah, TLDR, not even going to type it up. Weekly closes above 4K, fine. Anything else, not fine. Lower time frames, not worth trading. That's my opinion. ETH BTC, haven't seen any of these charts on crypto Twitter in a while. Understandable. ETH is, I mean, a lot of these rallies have been Bitcoin led. I think in Technical Roundup we discussed this as the range high, which is nice. That's kind of where the market got stuck and where the most recent rejection came from. You got like even like a perfect weekly close on top of it before it pulled back. I think structurally ETH BTC still looks fine as long as it doesn't lose its breakout level around what, just under 08. If it loses that, then you know the technical analysis meme, it's lights out below this level. You know, not to be super dramatic about it, but in any case, if we consider this contextually, right? You had a multi-month consolidation, because this is a weekly chart, right? So this is all, every single candle is an entire 1 week period. So you had a multi-month, that's like half a year or something, it's mad. You've got a really long consolidation. The market breaks out. If that then fails, I mean, holy shit, that goes from looking very bullish to very bearish, right? Because the best you could do after a multi-month consolidation and a break from balance is a failure to be accepted beyond it. And that would suck. It's basically the good old, you know, break, no acceptance, back into the range, nuke it to the range low. That's what that would look like, except with bigger implications, because this is a weekly chart, and this was supposed to be the breakout after months of doing nothing. So it's one of those things where strong bullish setups that fail are very bearish. Strong bearish setups that fail are very bullish, right? Just kind of your standard pattern failure logic. So in the same vein, if you have a market that moves sideways, you know, look at that. Massive impulse, sideways for months, breaks out, like at this point here, that looks like a strong bullish setup. If it falls back into the range, at that point the strong bullish setup has failed, right? And we can be upset about it because that would mean that the market's bearish. So just something to watch for the next couple of weekly closes or whatever, or as the market continues to pull back. Any acceptance back where it came from would just look like a bit of a shitty chart. So that's ETH BTC for the time being. And just generally, like, even forgetting the relative pair trade or whatever, I think the Bitcoin chart is much cleaner. So why not, right? Why not? Maybe I should turn off the live stream. Did it literally top as soon as we went live? No, okay, it didn't. It's fine. I'm not going to jail. It has been down only since I went live, though, which is unfortunate. Other stuff. AVAX. Look, for me, the area that made sense, where I wanted to punt a kind of, you know, the high time frame value area, was in this consolidation between 50 and, well, basically between 60 and 70. It just never got there, right? I really thought when the market was stabbing through these lows that maybe it would come and tap and then reverse, but it didn't. You know, it seems like the inside week setup, which is volatility, biggest kind of down move, inside week, spiked the inside week low and then mooned. It seemed that was enough without actually reaching my level of support, which sucks, whatever. I think the last time we discussed, the basic idea was some sort of profit taking into 100 plus into this pre-breakdown consolidation here. And that's sort of where the market's grinding right now. It's not, I don't see a super, you know, nothing's really jumping out at me on this chart or this trade specifically. It hasn't really been AVAX that's been leading the pumps either. I would say for a short to mid-term trading level, the daily cluster is still pretty sensitive and decent between 100, 107. I think that's like a fine mid-term bull bear line. The market seems to like it, so why not? But structurally, I don't see a ton that makes me excited for the time being, at least not without it coming into the relevant area of structure. So that's AVAX. If you want to see a doom scenario that I don't think is likely to happen, but I posted to a friend to shitpost while he was long, it was essentially that this 2 week move was the breakdown, and then this rally is going to be the lower high, right? So you essentially have something like, you know, very clear uptrend. This is the breakdown. This ends up being the lower high, and then it actually trades into the high time frame support. Not a ton of evidence of that at the moment, but you know, even on just like a relative risk to reward punt type of area, if there's ever going to be some sort of lower high or chop or whatever, it's likely going to come not far from here. So on a relative basis, it's probably not the best area for fresh business. People who like structure, I still think this daily cluster is decent, but really nothing, no screamers from on AVAX for me for the time being. what else I got? Luna. The one that got away, right? This daily is not forming up super nicely. I actually, like, I understand this thing trends very cleanly, but I've never been able to get like a super good pulse on it for shorter term trading, which makes me seem totally incompetent, which is understandable because it only goes up. So how on earth do you not have a pulse for it? Like, I understand that argument, but sometimes you just know these assets where you suck at trading them, and that's me and Luna, which is also the name of one of my dogs. So maybe it's that. I can't short it because it feels like I'm taking my dog to the vet to put it down. Anyway, what have I got to say about this? I mean, God, if we're talking weekly structure, like similar to AVAX, that it needs to come to some sort of value area to punt and whatever else, my eye immediately goes to the last kind of mini range we had before this final leg. But see, that's all the way down here, under 70, which would from the top be quite a significant haircut of, 30-40%, which isn't unheard of for altcoins. But the market would need to look like slightly different to what it is right now to set up that trade. But I guess, being completely honest, the only circumstance under which I could position in this right now is if the whole market were to take a massive shit and give you those outsized moves. And then the question is, well, what do I want to buy? And you should already have a watch list for that, for the types of coins that have been strong. Solana, Luna especially. I'm not going to say Sushi, hasn't really proven its strength, anything like that. So for me, really, the only trade that could come out of this would be one of those entire market collapse, dislocation, piece of shit days. And then you look at stuff that has been strong in the lead up, like a Luna, and then you punt it at your high time frame value areas, and you can get like 20-40% pretty quickly if you're Hasakaing it near the lows. But where it is right now, there's really not a lot that that I can say that's useful, to be completely honest. I don't even feel like making some shit up on this occasion, like some sort of short time frame level or anything like that. Yeah. Solana's interesting. I spent a bit of time looking at it. It looks like it survived its cluster top retest into the 170s. This is like a decent-ish failed breakdown type of pattern where you got to close at the level and then quite a deep move into it, but ultimately one that closes already back above, and then you get support at the original level itself. That's fine. All that is good price action. It's like market structure is still busted, just to be clear, right? If we just line chart this thing, you've got like pretty clear, just eye test, pretty clear uptrend type of territory, went sideways, and then it broke down. So if there's ever going to be some sort of fuckery lower high type of thing, it would be on this type of rally, right? So it's just worth being aware of that in itself. In terms of where that might fall structurally, I think you can take a bit of a liberty and box out the pre kind of all-time high consolidation. I know this is very, very liberal of an area. This is like a trader main type of box. But I'm not like super interested in chasing the first rally after a lower low. What I will say in its favor is that daily level we had at 190s, this one here, has been reclaimed. So maybe if you're like a massive bull, you can make an argument that, yeah, I'm going to chase this continuation, but if it's below 190s, I'll dip. I think that's just about acceptable. But again, being completely transparent, whenever I've tried to catch a rally after, like, soon after the first daily market structure break, I've just eaten shit. And I don't like eating shit, so there's not enough here for me to get very aggressive or chasing it or whatever. I think the setup that came up at weekly support was the one that made sense to trade. Similar to kind of Bitcoin, this rally post breakdown just isn't contextually attractive enough for me to get excited over. And again, this leg here was the first market structure break like in a very long time. So until proven otherwise, this could still be a lower high rally. And that's after the clearest setup has already played out. So I'm kind of meh about this. And there's no real kind of price structure that I love a ton to use as a pivot or anything like that. So I'm still pretty conservative on Sol. I think the weekly time frame looks decent because support held, but I think the easiest portion of the bounce is over. And now we're entering into maybe a lower high, maybe chop, and just a lot less clear type of territory for me. So that's kind of my take there. Does that make any sense? Like seeing this daily market structure break and be like, yeah, it's going up, but what happened before it started going up? Well, you got a market structure break to the downside. So the thought in the back of your mind should be, you know, there's a decent chance, or at least a non-trivial chance, that this turns into some sort of lower high. Then the question is, okay, how much of that lower high rally can I capture on the long side before it starts getting contextually unattractive and into areas of resistance? And for me, that's kind of now-ish, you know, now-ish. So I guess what this has in common with like BTC and stuff, it was a market structure break because it made a clear lower low on the daily time frame for the first time in quite some time, right? This is, I mean, this already technically you could use, if you're using short-term market structure, this could be the break. But if we're using really impulsive type of closes only, right? This here, this leg was a significant lower low after a pretty lengthy consolidation, right? There, here. That's what I mean. So I guess the TLDR on that is market structure gives evidence of flows, generally higher, generally lower. However, it is not always an excuse to ignore the changes in risk to reward / structure as you try to trend follow. I.e., even if MS bullish, longs can be shite when at res key level above. Even if MS bearish, shorts can be shite when at support key level below. Does that make sense? Market structure gives evidence of flows. Is it generally going to go higher or generally going to go lower? However, it's not always an excuse to ignore the changes in risk to reward / structure as you try to trend follow. If market structure is bullish, longs can be still shit if you're buying resistance. If market structure is bearish, shorts can still be shit if you're selling support. This is like Bitcoin at 44k or whatever it was. So like if you take an uptrend type of example, right? Something like this, and it will never look like this, or quite rarely, at least not in crypto. But just because the general direction is up, if you always end up buying close to here, you can still trade badly, even though you're on the quote-unquote right side or correct side of the market. That's kind of what I'm getting at with this point. And just like we had with BTC, at 45k, 42k, whatever it was trending down, but at a certain point, it reached this high time frame level of support. So if there's ever a shit time to wake up and realize the trend was down, it was there, and that's kind of what happened with BTC. Even if MS was bearish, which is what happened, shorts can still be shite when at key levels, etc., etc. So this is kind of what I'm getting at. Yeah, MS is market structure. So yeah, nothing like no screamers on Solana for me at the time of recording. I haven't really got a lot else. I mean, I've really leaned down my watch list before I develop some ideas into the first quarter of next year. I've just added a couple of exchange coins, FTT and BNB, but not a ton interesting there. My focus is mostly on Bitcoin weekly structure, and I would say Bitcoin and ETH, but honestly, Bitcoin's been leading and ETH is untradeable below the weekly time frame. So all of my mind share at the moment is on this bounce on Bitcoin daily, weekly. That's really all that's got my attention. And again, I've technically closed up shop for the year, so I'm just kind of monitoring it and, you know, keeping a finger on the pulse more than anything. And nothing too interesting yet on funding rates, futures, anything like that. One thing about this, you know, people using derivatives data is they're so used to getting signals from like clear disconnections in the market. Like when price is obviously mooning and futures are obviously fading it, you get some really reliable signals. And that makes it that, you know, if you're like an inexperienced practitioner, it gives you the impression that there's always this super clear signal that you can get from price and funding, or OI and funding, OI funding price, whatever, just from derivatives data. A lot of the time you can't. It's just a wash, or it's fair value, or there's no divergence, or there's like nothing noteworthy going on. I feel like you see that a lot with people whenever they just learn a new tool in general. They'll find like a rare-ish or outlier or high signal, low frequency example of it working really well, and they'll just assume that therefore the tool can always be used to that kind of effective capacity. I mean, most days I will look at futures data and think, yeah, whatever, there's nothing interesting going on there. I personally haven't seen a ton that's piqued my interest, to be completely honest with you. I saw a lot of chatter about the Binance, specifically the Binance open interest stablecoin margin, like completely mooning. And it has, right? It's made a new all-time high, which is pretty crazy. But honestly, if this were all retail shorting the bottom or doing whatever else, I would expect that to be slightly more pronounced in funding during the course of that OI buildup. And I would also expect it to be more pronounced in the form of either liquidations as the market started to push higher, or a continued fade in futures where you would get price pushing up and futures becoming more bearish, bases becoming more negative, whatever. And I just haven't really seen a ton of that in Bitcoin. So I don't have like a working thesis for this new all-time high in Binance OI, but I'm not convinced, or at least I'm not trading off of the idea that it's, you know, all the retail guys on Binance shorted the bottom and now they're going to get mega squeezed. Maybe evidence of that will emerge and I'll change my mind, but it's not like immediately clear to me that that's the case, you know? Also, Binance generally doesn't flip negative all too much, I think. Doesn't stay negative. Where are you? Yeah. Cool. So yeah, on the future side, nothing too crazy really for me. Again, I appreciate the somewhat idiosyncratic increase in, fuck's sake, stablecoin margined open interest. But I don't think it's, like, for me, there's no signal there at the moment. I'm just going to say it like that. I'd love to have, you know what, I would love to come on this live stream and just have fucking answers for everything and always have a thesis or an explanation or to sound like a genius. But sometimes I look at stuff and I'm like, well, this doesn't mean anything to me. And smart people are disagreeing over what it means, and therefore I'm not going to use it as the basis for a trade. I can give my reasoning for why that is, which is what I've said. If this were some massive short build-up, I'd expect to see it in the funding that would be staying negative and whatever else, and also some sort of disbelief leg, where as the market rallies higher, it would turn more negative, That's really the type of behavior, before blowing up, of course, that is the type of behavior I would expect if it were one of those massive counter-trend futures fades, but I just haven't seen a ton of evidence for that, so I don't have strong views. That's it. That's what it comes down to. Does that make sense? Like, I know it's not super sexy, but sometimes it's just the way it is, right? Someone's asking for an Atom entry, mate. Fuck knows, mate. I mean, not here. Not for my money, at least. Right? Not into this underside. I think the Chads that bought weekly support have been teleported to the promised land of weekly resistance. And I think that the easiest, the most straightforward trade there is complete. I wouldn't be rushing for an entry on this. Excuse me. Was there something else I wanted to talk about? Oh yeah, a lot of the DeFi stuff is running, right? Let's take a look at Sushi. Ledger shilled this to me near the lows, and obviously I didn't follow him. But for me, the setup just wasn't, like, contextually it makes sense, right? Where the argument is essentially that this move to the downside was exacerbated by, you know, governance issues and who's in charge and just like a classic Sushi type of drama saga. And then the frogs basically came and rescued it, and anyone that, you know, sold too much down here essentially gets blown out by overtrading or overstating the news. But contextually, as the market starts to reach into these prior floors, wherever they may be, I do expect some profit taking, especially around the 10 handle, to come from those Chads with conviction that were buying from the forced sellers at the lows. And again, purely from a market structure point of view, right? Low, high, lower high, right? I mean, technically lower low here relative to the breakdown, but if we take the big swings, right? This leg most certainly broke market structure. Big swing low, big swing high, short-term break, lower high, blatant lower low. So, you know, a lower high wouldn't be unreasonable given this leg, right, which broke this low and this low. So that's a pretty clear break in market structure. And then the question is, if there's going to be a lower high, where can it be? What are the spots for it that make sense? I mean, maybe the origin of the move, maybe it's this low, but the market's kind of sort of getting there. I think another leg wouldn't be unreasonable, especially into the 10 handle. But beyond that, I think if you weren't the Chad buying with conviction at the lows, I think chasing into their take profits is less, not a setup that I love. I think Aave is similarly retesting something, right? Yeah, in a similar vein. Also, Crimea Coin did super well. I think he just bought all of these DeFi lows. He posted charts of these swing fails and just completely chatted it, so credit to him. That was a sick trade to follow. In a similar vein, though, you know, if you're not a Chad like him, then good old market structure conclusions. This is still a breakdown, and as it approaches technical resistance or the origin of the breakdown, however you want to contextualize this area of previous structure, fresh longs become less attractive as those guys that took your money take more of it by, you know, taking profit and paying themselves on these very quick moves. So there was definitely a DeFi kind of redemption rotation trade to be had. I didn't take it. Honestly, even if I didn't have fucking COVID, there's a high chance I wouldn't have been in these trades anyway. But as they tick back into areas of prior structure, I think the easy portion of those trades is likely complete. So yeah, that's all I got. Also, my throat is kind of going, so I don't want to continue indefinitely. But yeah, my focus with is basically on BTC, unsurprisingly, because ETH looks untradeable below the weekly time frame, and alts in most cases I think have played out the really clear bounces to be had. And for BTC, you know, that summary sheet we came up with, that low to mid 40s is stacked with stuff, and low to mid 50s is also stacked with stuff. And that's about that's about as much as I've got for the time being. Obviously, the summary sheet we had has a bit more detail, but the kind of 4-second summary eye test chart is essentially range between low to mid 40s and low to mid 50s. I still don't see a ton of evidence that trending setups are going to outperform ranging setups, and when that evidence emerges, we can talk about it. That's all from me, though. Any final questions? And obviously, Merry Christmas, Happy New Year, Happy Holidays, whatever you're doing. Wishing good health, good vibes, and good cheer to you and your loved ones during this annoying period of, you breathe air and then you end up in bed for a week or whatever. Yeah, annoying. And also thanks for all the well wishes, of course, in DMs and all that. I appreciate it very much. It's very kind. Like the video if you like the video, and for all the best of luck next year. I think the Duck will have time to do a stream. How does it work? Yeah, I think you'll see Duck before New Year, and maybe, I'm not sure if I can do Casual Friday or New Year's Eve. Maybe I've got enough of a life not to attend that, but we'll see. In any case, thanks for all your support. Hope you had a wonderful year. Thanks for supporting the channel, all that good stuff. Have a wonderful holiday season, and until next time.